First of all, thank you everybody for joining me this Thursday night for a really special presentation. I'm looking forward for this one myself. Now, it's kind of interesting because I'm not an American, but I actually know a decent amount about American retirement accounts. But what I did was I went out to a real estate partner of mine and I asked them who's the best in the business to present on these types of ideas. And I got a professional referral to Matt. So Matt, I'll let you kind of introduce yourself, but just from my side, this is a really important conversation today. So I hope you guys are paying attention.
Yeah, no, thank you. And thanks everyone for your time. It's valuable, especially on this night. So as MIKKEL kind of mentioned, I do self-directed retirement accounts. So it's ways that US retirement accounts can be used into alternatives, as the industry likes to call it. But it's really your physical assets, your real estate, your private companies you're investing in, gold, real assets that people like to say, and kind of move your assets from the stock market if you want to, at least a portion of them, to defer. So we're going to go over tonight just kind of the basics and a little bit more on the international side, because there are some things that are really unique about doing it internationally. And our company is really good at allowing you to do that and kind of how to, in conjunction with MIKKEL, because there's other strategies that we're kind of good at telling you the overall plan, and then some of the details are filled in there. So we'll have a little slideshow, 30 minutes or so to go over just some basics, the international investing, and then we want to leave a lot of time for Q&A because I love Q&A, and also some of the questions you're going to ask are going to spark, and we're going to learn a lot more from the question and answer probably than the slideshow even.
Amazing. Well, I'll let you go ahead and pull up your slides. Quick housekeeping from my side, everybody. Please, this is a phones off meeting tonight. I want you guys super focused because I don't want you missing any of it. He's going to go pretty fast through everything. The second thing, as always, if your spouse is in the other room, partner, decision maker in your house, go and grab them. You got about 30 seconds before we're going to jump in here. I want them to watch this as well. And as Matt said, we're going to do Q&A at the end. So if you think of questions, use the Q&A feature below, not the chat feature, the Q&A feature below. And at the end, I will read through the questions and we'll try to tackle as many as we can tonight. Matt, I'm going to go ahead and turn off my video and mute myself, and I'll see you back here in about half an hour. Good luck, okay?
Good, thanks. So start with my least favorite part of the presentation is always about myself. But what you'll see there, I have a name on there, but my phone number, that's my direct line. So basically all day I spend talking to investors who are looking to utilize retirement accounts for these investments. So feel free to screenshot that, take it down. I'm available anytime. Email is there as well. At the very end, there's a QR code that actually links to my calendar. So if you want to book a time, that'll be available. And there's some other resources that are available from that QR code as well. And I'll make sure I mention it when we get to that slide. So how I got into self-directed retirement accounts. I was doing the stocks, bonds, mutual fund advising for quite a few years, a little over 5 years. And had someone that said, well, if you want to, invest in a good asset, you should buy some real estate property. So me and my wife bought a couple of rental properties. And once you kind of start to get a real estate bug, you really like that asset class. It just always bothered me that in the industry I was in at the time, it just wasn't an option. No one knew you could hold in a retirement account. If someone mentioned they wanted to invest in real estate, it was just taking away from the mutual funds that you could be buying instead. So I knew there was a local company that was offering 1031s and then self-directed retirement accounts, which allowed you to invest those retirement assets into real estate. And that got me started. Started with the company 6-7 years ago, did a lot of their servicing, processing, and then done education and business development since then. The company I work for is Equity Institutional Services. So Equity Trust Company is the larger company. As a whole, that's our Westlake, Ohio office. I'm in our Fort Myers, Florida office. Everything we do is here in Fort Myers, Florida, but we're owned by a company in Westlake. The company as a whole has 334,000 different account holders and 45 billion in assets under custody. One of the largest self-directed IRA custodians, normally within 1 or 2 on the rankings, depending on the year. In the financial world, that's not much. It's actually a pretty small company, but in self-directed, it puts us in the top 2. And then some of the other services we offer, 1031 exchanges for tax deferrals on business or rental use property selling, entity services and setup, and then private fund custody, and then a few things as well fall under the umbrella. As kind of mentioned, I'll go through the 101 of self-directed IRA just because it's a buzz term that people sometimes know about, sometimes don't. We'll kind of go over the 101s, and then we'll get a little more specific on using it for international investments. But first, the first question we always get a lot of time is, what is a self-directed IRA account? And not on the slides, but something I tell someone is it's a cool marketing term that actually means nothing. So self-directed IRA, you'll see sometimes your Fidelity accounts or Vanguard will say, well, it's a self-directed account. You get to pick your own stocks, bonds, mutual funds. No advisor tells you what to do. When we say self-directed, we mean you can pick different asset classes as long as it can be held in a retirement account. You can invest in it through our platform. But really, you're still opening the same accounts that you'd open up with us, that you'd open up at Charles Schwab. You're still opening traditional IRAs, Roth IRAs, and so on. The difference is that we allow you to invest in those assets. When retirement accounts were established in, I think, 74 was the first bill that passed retirement accounts. The bill actually says you can invest in anything except for a few asset classes. It didn't specify you had to invest in stocks, bonds, mutual funds. But a lot of the larger stockbroking companies said, well, we're already selling people stocks, bonds, mutual funds outside of retirement accounts. We should offer these and sell more stocks, bonds, mutual funds. So a company like Equity Trust came into play and allowed you to invest in all those other asset classes that are allowed to be held in a retirement account to get that same tax benefit, not just through the public markets. So this kind of states holds alternative investments. We hold some publicly traded stuff too, but I'd say 95% of the assets we hold are private assets. Mostly that includes real estate. Private placements is a general term for private stock ownership in a company, different startups, stuff like that. Futures and forex market, private notes, so lending money to either individuals or businesses, precious metals, and many more. What I mean, you can invest in a lot of different assets. I know we have one client who invests in racehorses. We've seen airplanes, all kinds of different things that people can hold in retirement accounts. One thing that the U.S. government has stated is you do need a custodian to basically hold the account and do some record keeping and tax reporting, and basically keep the account in compliance. That is basically the role that we fill as the IRA custodian, similar to what I said Fidelity or Charles Schwab would do on the publicly traded side. So what types of accounts can be used to fund a self-directed account? Most commonly what we see, so there's a nice little diagram that shows different accounts, but employer plans. So, someone worked for an employer for many years, contributed to the retirement plan, built up a good nest egg. They have those accounts they've rolled over, or they've changed employers multiple times. Those are most common. And then when people are either rolling those over to traditional Roth accounts or contributing outside of those accounts, that's what we see as well as transfers from existing retirement assets. You can contribute to a self-directed IRA too if you're still working and have earned income and you want to make contributions annually. You can do that as well, but I'd say most commonly we work with people who have already had years of adding to those plans, and they're just looking to deploy some capital into some other investment types. So why do people use retirement accounts for these investments? Most commonly, it's access to their investable assets. I talk to people all the time. They want to do investments. They say, well, I don't have any money, not realizing that, according to the stats, most of their investable assets are actually held in retirement accounts. Not everyone has the available money in their checking account, but they have an old 401k that they don't do anything with. It's kind of just sitting there and they forgot about it. So it gives them the ability to use those dollars for different types of investments and really diversify their portfolio more than just diversifying it in the S&P. And then the other reason is tax benefits. So the tax benefits still apply to those asset classes. You'll get, in a traditional IRA, you're going to get tax deferred growth. So while the funds are in that umbrella of a traditional IRA, no taxes. You can sell low buy low, sell high, make the capital gain, you pay no taxes there, and then do it again, and you get that compounding growth within the account with a traditional IRA. And then with a Roth account, you get the same tax deferred growth, but upon withdrawal, you're actually getting tax-free withdrawals with Roth IRAs. And then I didn't list it on the PowerPoint, but one reason people do it is to not have to take the money out of the retirement account and pay a 10% penalty or any taxes. So they can defer taxes. Nobody likes taxes. If we can obviously pay none or minimize the tax bill, mitigate it, that's one way to do that as well, versus lump sum withdrawals and giving Uncle Sam more than he deserves. So I mentioned there's a few asset classes that are prohibited from retirement accounts. At the very bottom, you'll see those. It's really vague on what can't be held. It's really just collectibles, life insurance, and S corp stock. And then if you have some federally illegal assets, those aren't held in can't be held in a retirement account as well. Beyond that, it can be held in a retirement account. So if it doesn't fall into those categories, the answer would be yes, it can be. The custodian that you work with, may have strengths or weaknesses in other asset classes, or they may just not want to do it. But as long as it doesn't fall into those categories, as far as like collectibles, we're thinking antiques, stamp collections, things like that, or has a collectible value and not maybe a real value. Life insurance is pretty self-explanatory. Life insurance has its own tax benefits. So that's the reasoning why that would not be held in a retirement account. S corp stock has mostly to do with the taxation, and then it's a U.S. retirement account still. So if the U.S. government considers it an illegal asset, so where we see this most commonly right now is cannabis investments. Certain states obviously have made it legal, and those trust companies that are located in those states sometimes can offer it, but federally, the U.S. government has said that it can't be held in a retirement account until it's federally legal. Once that happens, U.S. retirement accounts can get involved and raise capital that way. And then one more thing that can't be done really in a retirement account. This is pretty quick, and when I mentioned the QR code, there's actually a guide that I'm providing as part of that landing page as well that kind of goes over some prohibited transaction rules. I just don't want to spend too much time on it. If we really get into it, it's going to be kind of specific to the situation. We can go over what percentages and so on. So use the QR code, you can get the guide, but really what you're trying to avoid when the retirement account's involved is self-dealing. So if it's an asset you already own personally, you can't have your retirement account buy that asset. So if we'll use real estate as the easy example, you own a rental property, you'd really like to get that into the tax shelter of a retirement account before you sell it. That can't be done. So it does need to be a purchase from a third party at a fair market value to get it into a retirement account, not personal assets. And then while you own it, you're also not benefiting from it. So you're not buying a primary or a secondary vacation home. You're buying with the intent to rent it out and basically have a investment activity there as well. Not to say long term your plan can't be for personal use. We have a lot of clients who will buy assets with the short term goal of using it for building wealth for retirement, and then whether they change their mind later or that was always the plan long term, they remove the assets from the retirement account and now all of a sudden it's their personal asset. So with some proper planning, some tax mitigation strategies, there's ways you can use those assets in the future. While they're in the tax shelter retirement account, you want them to be for investment purposes. Okay, so that's kind of the very quick 101 for self-directed retirement accounts. We'll spend most of the time now is for international investing with a self-directed IRA. All the asset classes I mentioned have their own details, intricacies that you could go over. We could spend an hour on each one of them on how that works. But we'll just kind of go over those quickly and spend a little bit more time on the international side. So international investing is allowable investment in a retirement account, a US-based retirement account. In many cases, just for practicality of either us as a custodian, you as the investor, or the the way the investment works. Sometimes an entity may be established and owned by your IRA. So commonly, I may say on this a lot of times LLC, but that's the most common, but it can be any entity. Many times your retirement account, instead of buying a piece of property in Panama, may set up an entity. It owns that entity. So the retirement account owns the entity, and then the entity purchases the property. Where that helps is some jurisdictions you may buy real estate in don't want to recognize the US retirement account directly. They may require an entity to own the property. It'd be tougher as a custodian if we're the direct owners for the retirement account being the direct owner. We may have to go sign your closing documents. And as much as we'd like to go, drive around or fly around the country and sign closing documents, the entity allows the entity owner to do all those. In most cases, the entity owner is the IRA account holder. They basically elect themselves as manager of that, and they go and invest through an entity. Not required in all international investments. We do see where people will invest in foreign companies a lot of times. So a couple of examples, I know we had a group that was investing in a farming operation overseas, and that was done directly from the retirement account. If I think there was an Israeli startup somebody was investing in, that was fine. So, speak with myself or anyone on my team, and we can kind of tell you, what that structure could look like. But, in a lot of cases, what you're looking at is probably an IRA, some sort of entity in between, and then the investments that you do. Investments that do flow, basically, they flow through the IRA and the entity at all times. So as you make income from that investment, it goes back into the entity. Expenses related to that investment are also paid at entity. I'll go back to the real estate example. So if we had the IRA established first, the IRA sets up ABC LLC. ABC LLC buys a property internationally. That property gets rented out. The individuals renting it out pay the LLC the rent, each month, and that just stays in that entity. The IRA still is the indirect owner of it, so it still gets the tax benefits on the US side, but the entity just operates that property as the owner. All of a sudden there's an expense, a plumbing repair needs to be made. The entity just cuts a check out of an entity bank account, pays the plumber for the repair, and then business as usual keeps going. The only time funds would actually have to flow back to the IRA account that we'd have set up is if you're going to take a distribution or if you want to transfer it to a different retirement account. Otherwise, the entity basically acts as its own. You have a hands-on, basically, investment, that extension of your retirement account through that entity. Kind of mentioned there, investments still retain their tax advantages on the US taxes. So it's still possible the country that you're investing in may have their own taxes in that situation, but you are still getting that tax benefit on the US side of having the retirement account. So things we like to see is people tend to invest when they think there'll be a large capital gain with retirement accounts, because that way they can avoid the capital gains that they would see on the US side without retirement accounts. The retirement account still gives that tax benefit there as well. Trying to think of anything else on the international side would be specific. And this structure can get as simple or as complicated as you want. I've seen people set up multiple entities for various reasons, and that can all be done. And then the reason I think pretty vague on the international, especially on the real estate side, we've seen where just depending on the country, it can vary wildly. I know a lot of European countries, a US LLC is completely fine. They just want you to set up a bank account in that country. South American countries may have their own, rules as well. So it's good to have a contact, someone who has experience with that particular country, and then we can assist with keeping the IRA in compliance and funding those investments internationally. Actually, go back. I have one more thing to say. So there are other benefits to the entity structure that are just not for requirements of facilitating international investments. So there may be some benefits, obviously, in the litigation prevention side of having an entity that can help as well, separate certain assets from each other. I think I've told a story a lot of times, but we had a client who set up multiple entities for the reason of he had a large precious metals portfolio. But he was also buying I think it was a 5 or 6 unit building, so like an apartment building. He kept those in separate entities from his retirement account because he was afraid if someone tripped and fell on the apartment building that they weren't going to be able to sue him for all the assets in the retirement account. He thought he got the personal benefit. He kind of separated himself personally in the IRA, so it kind of protected him personally. But he was afraid that the vast majority of his wealth was actually held in a silver portfolio, and he didn't want someone tripping on the apartment to cause an issue with his silver portfolio. So he set up 2 entities that way as well. And another reason, as a custodian, we normally charge like a flat fee for an asset. And if you can hold as many assets as you want under the entity, we consider it one entity and one asset. So on your statement, it would say ABC LLC. ABC LLC, for all we know, could own 15 properties, have a brokerage account, a crypto account, everything flows to that entity. That's kind of what we're showing and what's on our statement as well. And we charge like a flat $300 basically a year for no matter what's in that account. So there's some other benefits, obviously, of the entity structure beyond just the requirement for international investments in most cases for that entity. As I alluded to a few times during the presentation, there's a little QR code there. So if you have I know MIKKEL said no phones, but if you can screenshot it, I think this is available in recording. If you hold your phone up and take a picture, it'll take you to a little landing page I had our team create. What's included in it? It's a link to my personal calendar. So if you do want to set up a time to, maybe beyond the Q&A, if you have some personal questions, you have more, want to go into a little bit more detail. I've tried to speak a little vaguely just to keep them in obviously every situation will be a little bit different. Book a time on my calendar. That's what I do all day. So you're not inconveniencing me in any way. We can talk through any situation you have. Our online application to set up an IRA account with us takes about 15 minutes. It's all done through DocuSign. And then I was really quick on the prohibited transactions. I said, I covered pretty much the basics of it, but there is a full guide there that you can download, as well as some other resources that are available on that landing page. So a good place to start, kind of gives you a little bit more info maybe than what we've covered here. And obviously my direct contact information to set up a call for better discussion. We finished quick, so we're gonna have extra time for some Q&A.
You finished very quick. We were saying 30 minutes. You did about 20, but that's
20.
all right. Why don't we? Well, I talked for the first 5 minutes in a welcome, so that kind of that ate up a little bit, but that's all right. Let's do it as Q&A. So I can see there's about a half a dozen questions in the box right now. Just a reminder, don't use the chat or the raise hand. Go to the Q&A button. You can type in your questions right now, and we'll start banging through these immediately. All right. If you want to go ahead, Matt, we'll stop sharing screen and we can pull up later on your contact information.
Yes.
But the very first question, and this one's that near and dear to my heart, is can you invest in gold and Bitcoin as well as international real estate? You definitely covered the international real estate, but talk to us a little bit about the others.
Yeah. So gold is definitely one of the things that is most known for self-directed IRAs. So most people don't know the term self-directed IRA, but you actually do because you hear about it from Start Your Gold IRA now. That's what they're talking about as a self-directed IRA. So definitely on the gold side. Bitcoin's obviously a newer asset. The answer is yes. The industry's catching up on different ways to do it. There's a lot of different ways. So we have some relationships with some different brokers. If you have that entity set up, you're not restricted anywhere. We don't have to have a relationship. We have to have never talked to that provider ever. You can go anywhere and purchase cryptocurrency through that entity, as well as the international real estate. Currently with gold, something we'll mention is you are asked to have it in a third party's depository or safekeeping. So, there was a case law not too long ago where a couple was storing it themselves. Like it wasn't a small amount, it was like $250,000 or $500,000 in metals. They had it in their safe, and basically for whatever reason they got caught up in an audit of some sort, and they just found out that they were self-storing. It came out that basically the ruling was that you should have a third-party depository. We work with, I want to say 5 or 6 currently that are good, reputable depositories. If you have a different depository, that works as well. And we're treating cryptocurrency similarly. Our recommendation is that if you're doing storage, maybe don't keep it yourself. Try and find a good term, broker, different one to do your storage for you. That way, the case law is probably years and years down before we ever actually get a ruling on cryptocurrency. But we want to avoid the government having anything to say about that. So probably
100%.
safe to have someone else store Bitcoin. But yes, definitely an allowable investment.
Well, and on the note of precious metals, if you guys go to expatmoney.com/gold, you'll see the partners that I work with. These are very trusted people. I have done a lot of work with them, a ton of due diligence on there. All the information is on expatmoney.com/gold, and they can definitely help you set up an account. And then you bring Matt into the conversation, and you can hold the precious metals offshore, 100% allocated, 100% segregated, 100% insured inside of a retirement protected account. Very, very good option there. Okay, next, let's see. Kevin would like to know, can the entity be owned partially by my IRA and partially by me personally? Great question.
Yeah, it's a very good question. So yes, and that would extend to other people as well. So the entity doesn't have to be solely owned by the retirement account. So I'll answer in a way. You can have partners who are completely third parties, business partners, and so on, want to buy parts of that entity, and yourself personally, spouses, other retirement accounts. So that can be done. And the only part that gets a little complicated if you do it with yourself is whatever ownership you start that entity with. This is specifically if you do it with yourself or a spouse. You have to keep those percentages long term if it's yourself, because you wouldn't be able to sell ownership to yourself. Same reason I talked about selling that property. So if you end up with an entity and it's 50% retirement account, 50% retirement funds, or sorry, personal funds, you buy that asset. If you go to add more funds later, you just want to keep those percentages the same. So it adds a little complexity, but definitely can be done. And you can, as I mentioned before, if you have multiple entities, this may be one reason to do multiple entities too. You might have one where you have some personal funds in a retirement account. You may have one that's just retirement account. It's all about the structuring, but yes. Yep.
Amazing. Okay. Brad would like to know, for international investing, does ETC need to report beneficial ownership interest, BOI, under FinCEN?
Yeah, I'll give a little background. So this is coming, I think this year is the first year where entities or LLCs were required to do an extra filing for beneficial ownership. If it's and basically we're not required as the custodian to do it, but the LLC manager currently is. I don't know, and this isn't my expertise on other entity setups, if that's still required. I know with US LLCs, the entity manager is still required to do the FinCEN reporting as of this year.
Yeah, January 2024. It was like
that may vary
January
wildly.
2nd or something like that.
Yeah, so that's something new on the US side. So that would still apply to US LLCs. For international entities, I don't know the answer to that one, if they're still required or not.
Perfect. Okay, David asks, this one's kind of a hypothetical, but I know where he's coming from on this one, although it might sound very specific. I know why. But what about Panama as an example of investing using a Panamanian entity that is making an investment in Colombian tree farms? Gee, that sounds that sounds very familiar.
As the custodian, that is fine by us. Yeah, that's not a problem at all. As far as what we're gonna know, you're investing in the Panama entity. That's kind of the end of what we're looking at or reaching at. And I know we've had people, I don't know if it's Colombia or Brazil, we've had a lot of different tree farms investments as well. So I do know that as well. So nothing raises any red flags. That entity setup sounds fine to me.
Amazing. Okay. You mentioned here we go. You mentioned a crypto account. How might that work from a Roth IRA standpoint?
Yeah, you still get the Roth account benefits. So, yep, if you're holding crypto in or especially Bitcoin in a Roth IRA right now, you're probably very happy, especially this last few weeks. But yeah, there's no difference. Yeah, nothing really at all. The only thing I can think that was kind of a complication, and this is getting better. Obviously, some of the tax reporting, some of like Coinbase and so on blew up very fast a few years ago. And the only issue we found is sometimes they didn't know who the investor was. They may not have known it was a Roth account. And they're saying, well, here's a 1099 and here's your tax reporting. Basically, it's not worth it. You're still getting the Roth account benefit. So to answer yes, it may be worth just checking who you're investing with to make sure they understand that's a Roth account or a retirement account in general, just to not cause any confusion where they're thinking you have a taxable event and you don't have a taxable event.
So why don't you give everybody a 30 seconds, the difference between a traditional and a Roth, just in case they don't know?
Yeah. So traditional, I would say most time, if people don't know what type of account it is, it's probably traditional or a pre-tax account. It's the most common contribution you're going to make to a 401k, and that gets rolled to a traditional IRA. The benefit of traditional is you have a small little tax benefit in most cases that you can have. You make a contribution now. Those are going in as pre-tax dollars. And on the 401k side, it can be very substantial. People who have larger incomes contribute to those plans. They get to decrease their taxable income for that year, and it might keep them out of a bracket. The downside of those accounts is pre-tax dollars. It's growing tax deferred, but when you pull those funds out, you're going to pay taxes on what you pull out. And with proper planning, that can be fine because you'll pull out just a little bit what you need, and you can kind of keep your tax bill reasonably low. You're basically getting a tax benefit now to pay the taxes later. Unfortunately, if you do have to take a lump sum out, you're going to pay taxes on most of what you pull out beyond contribution. So that's how a traditional IRA works. And that's the vast majority of accounts. Roth IRAs came, I think, 10 years after that. And what that allowed you to do was make contributions to a retirement account post-tax. So instead of getting that tax benefit now, you're making that contribution after tax. You've already paid taxes on that money. And as long as, basically, when you made that first contribution, you wait 5 years, any growth that money has is also tax-free. So what you put in is tax-free. What you pull out would be tax-free beyond age 59.5, which is when the early withdrawal penalty goes away.
So basically, if you expect it to be a highly appreciative asset like Bitcoin,
yes,
then a Roth is definitely a very good way to go. If you bought Bitcoin in 10 years ago in a Roth, you are an extremely happy individual right now.
Yeah, you're smiling if you did in a traditional IRA. You're really smiling if you did in a Roth right now.
100%. Yeah. Okay. Ben says, if you open a self-directed account and buy gold, who holds the physical gold? I think we kind of covered this one. It needs to be done by a third party. So an official depository. You're not going to have it under your mattress or buried in your backyard. We work with one. If you go to expatmoney.com/gold, it's a proper offshore precious metals depository, very philosophically aligned, very, very secure, very good people to work with. But yes, don't put it under your mattress. Okay, next one. Okay, I'm not sure on this one. I'm going to skip it and come back to it afterwards. All right, next. If you have a retirement funds in a government-approved Brinks bank in silver, can it be transferred for international investment?
Yes. There's the only hesitation I had. So international, like as MIKKEL mentioned, like international.
I think what they're trying to say is, let's say that they have it stateside and they want to move the precious metals into the Caribbean. Can it still be done through the retirement accounts? Not just purchasing, but a transfer.
Yeah, that can be done as well. Now there will be a cost. I don't know what Brinks would charge it, but they're going to insure what they're transferring because they're going to ship that to the other depository. So it'll have a cost to it for sure, but that can be done. They don't need you to sell and then rebuy through someone else. So we call it an in-kind transfer, meaning you're not selling, you're actually transferring the assets in kind to another provider. So yes, that can be done.
Amazing. My friend John is on the call. He's asking, do you allow self-directed IRA checkbook IRAs?
Yes. So that is the self-directed space is very good at marketing terms that mean anything. So checkbook is actually the entity structure we kind of talked about. The reason it's called that is you have the ability to have that bank account, that entity bank account, and basically do your investments from a checkbook, pay those expenses and so on. So maybe I should kind of go what that looks like a little bit slower than I did probably in the slideshow. The IRA is established first. We'll do LLC because that's the most common. The LLC setup, owner is the IRA account. You elect yourself the manager in almost all cases. That LLC then sets up a business checking account. You can set that up anywhere. It's just a regular business checking account at any bank. And then we'll deposit those retirement funds into the entity's bank account. At that point, you'll have a checkbook, it's an old card, but a debit card, anything else that you're operating those investments from that bank account for the business. So yes, we offer it, and that's kind of what that setup looks like.
Amazing. Okay, this one is from Jen Leonard's from our Facebook group. If you guys go to expatmoneyforum.com, you'll know Jim very well. I'm going to just read this verbatim. So if I get this right, I can take my IRA funds, form a foreign corporation in a territorial tax country, wholly owned by my IRA, and direct how the corporation invests the IRA money. I just have to have your organization in the middle and paying a flat fee. I am directing my IRA investments as I choose through the IRA-owned corporation. Then the IRA distributions come out under the IRA rules. Correct?
Yeah, for how I'm reading that as well, that sounds like a very good understanding of the setup. I'm just trying to see if there's anything. Yeah, no, that really does describe the setup as well. Yeah.
Amazing. So yes, John. Yes, Jim, you got it correct.
Yep.
Okay, John. That's where I got John from. Is with the next one. Can the IRA directly invest in a foreign that's into real estate development? Yes.
Yep. Yeah, definitely.
Okay, what are the fees associated with a self-directed account with your firm? Walk us through the fees, start to finish, so they understand.
Yeah. So the first year of having an account with us, your total is going to be $530. So $530. That's set up. I'm thinking international wire. I'm trying to factor in everything. International wire, processing of any entity documents, and then our annual fee, which is what you'll look at for year 2 and on, is $325. So that's included in that first year, $530. $325 is the flat fee for holding basically an entity on the books. And like I said, that entity can then invest in anything you'd like, but that would be the setup. And if you don't do an entity, it's basically the same structure as well. So $325, regardless of the amount.
Super duper affordable. I had one person who mentioned at the beginning, they're like, I think this is really expensive. Like, I don't think so. I looked at a number of different companies. I've been doing this for a dozen years now, and I'm pretty sure this is super duper affordable. So I'm glad to get the fee structure out of the way, make sure it's very, very clear on this. Okay, next. Okay. Can the IRA directly invest in a foreign entity that's into, I think we've answered this one. Okay. Some of the questions are quite similar. So if I miss yours, that might be why. Okay. If my self-directed IRA holds gold in a vault in a foreign country like Switzerland, can I withdraw physical gold from the self-directed account while I'm physically in that country?
The rules would state no, that if you take the personal possession, it's a distribution from the retirement account at that point. If you want to do it,
so I guess
like
physically, it's probably possible, but there would be a taxable event.
Correct. Yeah. If you wanted to do that personally, you just tell us what you want to take out at the spot price at that time. We'll just consider that the IRA distribution, and you could take it out from that point. As far as the setup of having it stored in a foreign country, that part's fine. It's just the withdrawal of the physical gold while you're there.
Okay, perfect.
That'd be a distribution. Yeah.
Okay, Brad says, I love the flat fee. Me too. I like knowing exactly what I'm going to be paying. I don't like an assets under the management type of structure with these. That can get very costly. Okay, do you offer mobile deposits or remote deposit?
So currently we don't have that set up. I know it's in the works because they're redesigning the app to allow those things. Now, the structure we've been talking about mostly today, that really wouldn't come into play too often, because you'd be depositing into whatever bank you choose. And then that bank, you would want to pick one that allowed mobile deposit or remote. But yes, in the future, that's something we'll definitely be working on, because I know it's on the app to-do list for that reason. Because we get a lot of people who are not doing the entity setup and they have rent checks that come in all the time. We do have online payment systems. So if you have, for this reason, tenants or anything like that, they can deposit online. That can be done as well. But the mobile app is in the works.
Perfect. Adele asks, and what are the benefits of having an LLC set up in Panama or a foreign country versus inside the United States? Quickly from my side, Panama, we don't have LLCs. We have corporations. They're called SAs, Sociedad Anónima, which is basically an anonymous society. We can use these types of corporations. We would think of this as like a traditional corporation opposed to an LLC. But you can talk maybe, Matt, from the LLC side, using that opposed to a foreign country vehicle.
So we don't have a requirement that it has to be an LLC. I do use that as my example just because it's most common, because they're easy to set up. There's not much paperwork that goes into it. But you can use any other entity type. That's not a problem. And as Leo mentioned, a Panama entity would be fine as well. As far as the pros and cons on the legal side, I can't really say there too much. I'm just not the expert. There's other experts, on this call that probably can give you a better answer on that one. Some countries or, wherever you're investing may have that entity set requirements. The example I get a lot of times is, I believe Mexico I've been told is they want a US LLC to be held by the retirement account. And then the LLC from the US side purchases an entity in Mexico. That is what the attorneys they've talked to have recommended. I've heard it a few times. So it just depends on where you're investing, the setup. But I hope that answers that question a little bit.
Amazing. Okay, Jim is back. So he says, I will clarify. Can I form a foreign corp, then fund it with my IRA funds to operate my new agro business? Okay. And then he says, sweet, exclamation point. And I'm forming a corp ASAP for the IRA and purchasing several hundred acres ASAP.
Yeah. So the way you're laying it out can be definitely done. That's not a problem. More just question, obviously, Jim, we could go over that in more detail, the phone call. I guess caution against anything that would be seen as like a personal benefit now. You'd want those proceeds to go back into the retirement account. You wouldn't want to work the property yourself. So obviously you don't want to hire out anything in that sense. But so there's some details we could go into, but
basically keeping it at arm's length and no self-dealing, and don't stay in the house that is on the farm or something like that. Yep,
correct. And then any proceeds go back to the retirement account. So yeah, we can talk more detail, but the way you're structuring it sounds good. Yeah.
Okay. Any experience in dealing with real estate investments in India? From my side, it doesn't really matter where the international real estate is going to be, right, Matt? I don't think that as long as it's not on a sanctions list or something like that, international real estate is going to be viewed as international real estate. Is that a correct statement?
Yeah, no, you're correct. Yeah, I'm not aware of anything. Like I said, I guess if it was investing in something that the U.S. government considered federally illegal,
like a sanctions list, like, okay, don't go and invest in, I don't know, Venezuela right now or Cuba or Iran. And then I think if you keep it to not these countries, then I think you should be fine.
Yeah, I don't have any experience, I think, with India specifically, not that I can recall. So you just want to speak with somebody who knows if there's any extra layers other than what we've talked about today, to take those steps, but otherwise it should work practically the same way.
Okay, I can guess on this one, but I'll read it and I'll let you answer anyways. Who owns the title to the property? The owner of the IRA?
Yes. So depending on who's the owner, if you do it through the entity technically owns the property. And then it's the question of who owns the entity. And that can be the IRA account. It could be multiple people and the IRA account. But yeah, it just depends on the paperwork side to get technical.
From my side, let's say we help you buy a property here in Panama. We'd set up a Panama SA for you. The Panama SA would own the title deed for the real estate. and that would be, and then that entity would be owned. The share certificates of that would be owned by the IRA, and then you would be the beneficial owner. Like it's kind of a daisy chain through things. But the title deed in the registry would be the corporation. Like the public deed
Correct.
would be the entity. Okay. Do you offer bonds investments? I think we clear this one up. You guys don't offer investments, right?
Yeah. So normally the compliance team would tell me I had to say that first. So we don't actually offer any investments. We don't sell anything. That's why we charge the flat fee. We don't charge commissions or anything like that. So we don't offer the bond investments. Our clients can hold bonds in the account though, but it's mostly through somebody else has sold those bonds. We just do the custodianship.
Perfect. Okay, Robert would like to know, are there any threatening signals from the IRS for this specific vehicle of investment as it pertains to international investments? Is this on the dirty dozen list? Is this seen as a bad thing or a negative thing in any context whatsoever by the IRS?
No. So the IRS is very annoying in how they do case law. So the things that they are fine with and they see, they never make any comment on. The things that they don't like, they obviously fine you and make comments on that. So this has come up for people who have done other violations that the metals example I gave earlier, that couple actually had an entity set up and they were still storing it personally. They looked at the whole case. They mentioned nothing of the entity set. They're like, this is fine, no problem. It was just the storage that they mentioned in the case law. So it has been under scrutiny and it's cleared every time. This is just one of many examples where they've come to that, never mentioned the entity set at all. So that part seems fine. As far as, is there anything like with the foreign entities? No, I mean, what we do each year is we report a 5498. So the only reporting that ever gets done is a 5498, and that just says how much money has gone into your retirement account, what's the total value of that. In most cases, that's self-reported. But I mean, we have clients all the time who will have an entity, especially with an alternative. So it'd be weird if your stock portfolio did nothing for 5 years and all of a sudden you had 100% growth. But in alternatives, that's pretty common actually. So you may have an asset where you invest in it for 5, 6, 10 years. It's a nothing. It's a startup company. You put in a certain amount, it's nothing. So that wouldn't even cause a red flag if all of a sudden in year 5 or 6, the value skyrocketed. That's not normally enough to cause any red flags either.
Perfect. Okay, John would like to know the entity reference here. Is the entity here or in the US or abroad? I believe he means your company. It's a US based company.
Correct. Yeah. Trust and chartered through South Dakota, but our operating companies are Ohio, Florida. We do have an office in Illinois as well, but the main companies are Fort Myers, Florida, and Ohio.
Okay. It's a personal one, Matt. Let's see if you answer this or not. But basically, they're asking, do you use a self-directed IRA? I mean, it's what if you? Yeah. Like, do you eat your own cooking?
Yeah, I do.
Okay.
So yeah. Most of my real estate investments are held outside of retirement accounts. For the longest time, when I was in my 20s and early 30s, couldn't say I'm still kind of in early 30s. But now I've been able to do it. I actually owned. Before we were Equity Trust, we were actually part of a company, and I owned part of that company in a retirement account. They sold out, and then now I do some real estate investing. I haven't done the international side yet, but I'm always looking because
soon, Matt. I'll initiate you. I'll help you. I'll coach you through it.
Yeah.
Okay, here's a great question. What are the biggest mistakes you see folks make when a self-directed retirement account, with a self-directed retirement account?
Yeah. I'll start if you're worried about some of the setup. So we do have people who do look through the documents, make sure that I's are dotted, T's are crossed, that we're not setting it for failure. So a lot of people think when they do self-directed, they're on this on their own. If they mess up, it's all on them. So not only am I available, but we have a dedicated service rep that's assigned to you. They're not obviously not going to be doing your investments because most people, if you're doing your own investments with that entity, but they're going to check those documents and make sure nothing was missed, that we're not setting you up for failure on anything. As far as what I see, most commonly what we'd see is somebody. I always tell people, maybe if you're going to do this entity setup, set it up with a different bank than you have your personal account in. Because mobile banking is very easy, and I've had some LLCs myself, it's really easy to accidentally deposit funds into the wrong account. Now, as far as that does look like you're adding funds to your retirement account that you shouldn't be adding, or you're pulling funds out of a retirement account that you shouldn't be. It can be easily fixed, and it's not something that's going to cause the custodian to get mad or the IRS to get mad, because you can normally remedy it pretty quick. But best to probably keep those as separate banks, just to make it easy for your record keeping. That's the most common. But we do have people who didn't know they should, if they want to take funds out a retirement account. Actually just had a guy this week. He wanted to take funds out, and he told us like a year and a half later that he withdrew like $100,000 like a year and a half ago. And CPA is like, well, where's the 1099? And we're like, for what? We didn't need a 1099. You didn't do any distributions. Like, oh yeah, I did. 150,000 came out. He just pulled out of the LLC. We remedied it. We got a 1099 so he can report it, and we're good. The most common, it would just be that maybe not proper record keeping on some small things.
Makes sense. Okay.
Yeah.
Art would like to know, can I rent a property owned by the entity? So for example, an LLC in a self-directed IRA that's owned by me. So basically, could he purchase a property with his IRA and then pay rent to that property and stay in it, fair market value rent in that area? Is that possible?
It's not. So that does go into the self-dealing part of it. So who could rent that property is anyone who's not yourself, spouse, lineal family members. Weirdly, brothers, sisters can, but you have to charge them fair market value. You personally just can't get that benefit while it's owned by the retirement account.
Okay.
Even at fair market value. Yeah.
How about kind of similar vein, but a little bit different? So can we buy a vacation rental in Greece or Mexico in this example, and then rent it out? Then when they're ready to retire, can they use it for personal use? Does this create a taxable event?
This can be done. So this is pretty common that we see people who long-term, like I said, have the plan to use it personally. At that point, it's going to be removed from the retirement account. So when the time comes, the whole time you've been renting it out, you've gotten the benefit. But when it's time you want to use it personally, you just distribute it from the retirement account. You either take personal ownership of the entity, or you can sparse out the property and just own it personally. At that point, it can create a taxable event if it is that traditional IRA. And you can do this partially too. So I'm going to add a little complexity to the answer. If you want to do that distribution over a certain amount of years, you can split it up over time for tax advantages. So you don't want to max out a tax bracket, or you do want to max out a tax bracket, but not bump you in the next one. Take out 10% of the property over 10 years. At the end of 10 years, you own it personally, and you can use it at that point. So there's a lot of strategies that can go into that, but to answer it, yeah, it just gets removed from the retirement account. You can use it personally then.
That's a cool strategy.
Yeah.
Okay. Is there anything we should be aware of for estate planning? This is from Sherry.
Don't know if that's my expertise to give you there, but what I can give you on my expertise is some people a lot of times will ask about trust. I haven't got that question yet, but they ask, can a trust own with a retirement account? What we kind of see often is if you do have a trust, we're not going to have the retirement account own it, but the beneficiary of your retirement can be a trust. And if you passed early before taking the funds out, basically the trust would inherit the IRA account temporarily, and then it gets split based on how the trust dictates that gets split. So I guess that would be kind of an estate planning thing. More or less on that same vein, I guess more or less it'd be, think of having a tax planning strategy, I guess, for long term. Sometimes you'll think short term as far as that. It's good to have that plan out 5, 10, 15 years on how we're going to mitigate taxes long term.
Perfect. How long does the asset have to remain in the IRA? I am 50 years old right now.
So the early withdrawal penalty currently, so if you remove any retirement account assets before 59.5, there's a 10% penalty. For Roth, you can pull out the contributions, but for simplicity, 59.5, there's a 10% penalty. After age 59.5, the 10% penalty goes away and you can remove it. So technically you could take it out right away. For your specific situation, to avoid that penalty, it's best to wait till 59.5.
Amazing. I've got a whole bunch of comments here. Thank you. This is great. I got MIKKEL, I'm reading your book right now. I'm very happy to hear that. I hope it's beneficial to you. Lots of good things in here. Okay, we'll try to go for a few more minutes here, try to answer as many questions as possible. All right, let me be a little bit choosy with my questions. Okay, that one's done. All right, there's a question in here from Donna. What is the best country for investing in IRA funds from an investment perspective? Matt can't answer that. Like,
Yeah.
I mean, that's not, he's a custodian. He's an unbiased. It's not for him to sell investments or give financial advice or anything. He's working on this as a fiduciary to help set up the accounts and work as a custodian with these types of things. I help lots of clients, look at the geopolitics of a region, understand the local demographics, understand the types of areas you might want to look at. If you guys go to expatmoney.com and in the top right-hand corner, there's a big orange button that says work with us. At the bottom of that very long letter, which I highly suggest you read on your laptop, not on a phone, there's an application form to work with me, and then we can look at the best countries for many different types of things. And that should be able to help you with that. Okay. Let's see. All right. Jason says, are commercial banks, okay, hold on. Are commercial banks equals US or overseas ever willing to make mortgage loans against real estate in self-directed IRAs? Or is the fact that those assets are protected against foreclosure up to $1 million or more prevent that? That is, can you use leverage to purchase investment real estates and self-directed IRAs in any jurisdiction that you were aware of?
Yeah, very good question. I was reading it a little bit differently. First, I'll start with maybe how I read it first. You won't use the retirement accounts as collateral for personal loans, but to answer, can your retirement account take out loans? Yes. So the keyword, it has to be a non-recourse loan, meaning they're not going to be able to go after your personal assets. It's basically a deal-dependent loan where at the most they could do is take back that property. But yes, there are specific lenders who specialize in lending to retirement accounts. Most of that I'm aware of are US based, but if you can find, technically anyone can lend you money and just say, yes, I'm not going to go after you personally. The only thing I can do is take back this property. Then that's allowable investment or allowable loan in a retirement account. They extend your entity or your retirement account leverage and you get that benefit. So that's a quick answer, but yes, if we're doing a real estate 101, I would have definitely covered that. But to answer your question, yes.
Cool. And then I'm guessing you saw the follow-up from Jason on this one. Would a personal guarantee violate the IRA rules?
Yeah. Yes, it does. Yeah.
Gotcha. Okay. Okay. If I'm holding only precious metals in a self-directed IRA, do I still need to set up an entity?
If you want to hold them domestically in the US, no. That's fine. You don't need the entity set up. There's a lot of groups who can do that. If you want to hold them internationally, you'll want to set up the entity to hold them internationally.
Perfect. Okay, I think those are the bulk of the questions there. I think we did quite well, and we're bang on time right now. If you guys have one last quick one, I'm happy to answer that. I got a couple of ones. Will there be a recording? Yes, I am recording this. I will be sending it out. We'll see how long it's available for, but if you've got friends or family or something like that who you want to send it to, then you have my permission to share it with anybody in your network. I usually allow these presentations to be viewed for a week or two, and then I take them down just because a lot of these things are timely and we're talking about legal structures and taxes and things. I don't want necessarily someone taking advice on something 5 years from now and saying that MIKKEL said this and it ends up being wrong just because of changes in the law. So yes, I will put out a recording ASAP. Adele says, got to hop off. This was valuable, and I look forward to watching the replay of what I missed. We're happy to have you here. Okay, last two questions. All right. Would a business LLC in the IRA be able to have a credit card?
So credit card, no, most of the time, those aren't going to be non-recourse. So debit card, yes. Credit card, in most cases, no. They want to go off personal credit or business credit. So yeah, different.
Yeah. And then probably you could even do a MasterCard debit card or something. So you could still have the flexibility of it, but without it actually being credit.
Yep.
Okay, I would think that if you pay the IRA-owned corporation, then the corporation could get financing for an additional property purchase. No? Question mark?
So the non-recourse still applies to the IRA, even if the entity is set up as like the in-between. So it's really just an extension. I'll go back to the LLC. LLC is just a pass-through entity. Even if the LLC gets the financing, it still should be non-recourse. And people who invest in company, a lot of times, a lot of corporation debt is non-recourse in a lot of cases. So for real estate development, a lot of those loans are structured as commercial loans are non-recourse. Not in all cases, but in some. So those can be fine. But yeah, in most cases, you just want to make sure it's still non-recourse. So you're not personally guaranteeing it.
Amazing. Okay, I've got a request. Can you please put back up on the screen the contact information for everybody? And I'm going to go to the chat right now, and I'm going to copy and paste Matt's information in that. And I will also, because I had tons of questions about the precious metals, I'll put in the address of someone I can vouch for. So those two things you should see in the chat. Okay, and you've got the QR code. So everybody, you can now take out your phones after MIKKEL spoke with you about that. Take a quick scan of that or photo of that. 3, 2, 1, and then Matt, maybe if you want to go to the very first slide, and now we can see your phone number there. So the phone number is, I would assume it's a +1 239 333 4461. And then is a little bit small for my eyes. Can you read out your email?
Yeah. So M for Matt dot Calhoun, CALHOUN at trustetc.com.
Amazing. Matt, thank you so much for your time. I really appreciate it. I hope that this was valuable to everybody. I am a big fan of tax preferred, tax deferred, tax as little tax as humanly possible. So this was a topic that we have not covered before, at least in a format like this. We've done special reports and blog articles and books and podcasts, but I thought it'd be fun to get everybody together today. So I hope this was valuable to you. Matt, thank you so much. And hopefully you'll be hearing from lots of my clients in the coming weeks. Have a great night, everyone.
Yeah, thank you.